Now, what about currency pairs like the dollar to the yen? Now here it's a little bit different because the yen, a single yen has a very low value versus most other currencies. For example, the dollar. So if we look at our quote here, I have 109.47 yen to the dollar. So here you'll notice that the dollar is actually on the other side of this little equation here. When we were looking at the euro, it was the euro to the dollar, and in this case, it's the dollar is in the base position. So this currency pair represents $100,000 worth of value, basically, compared to the yen. Well, this is taken out to at least the third decimal place, and in fact, the same rules generally apply. So if we have it all the way out at 109.47, well, the 7 is the pip place, or the percentage in point, if you want to know what that stands for. It doesn't really matter, it's just the minimum amount that an exchange rate can actually change in value, up or down. So 147 is, this is where the yen is currently priced, or in other words, how many yen it would cost to buy a dollar. Now, again, we take this out one more decimal place. Now, this didn't used to be the way that it was, but recently, as the forex market has become a lot more liquid, we take it out an extra decimal place, but not to the 5th point in the case of the yen, but to the 3rd decimal place, and that's our pipette, or 1/10 of a pip. Now the calculation, if the dollar is not on the quote side, but is on the base side, is going to be a little bit different to try to figure out, well, what is the value of a pip then? In this case with the yen, so we'll do an easy one here. So we'll assume a quote of 109.475. The base is the dollar. The quote currency in this particular pair is the yen. And we can calculate this out. So we know that this represents 100,000 units of the base currency, which is the dollar. So with that information, then we can decide, okay, if we have, let's say, an interest in one full lot, so a full $100,000 worth of value in this case, well, what happens if the exchange rate changes by just 1 pip? Well, let's do a little bit of multiplication here. So we have $100,000 worth of value. We're going to multiply it by the exchange rate, which is 109.475. So that means we're trading basically 10,947,500 yen worth of value. So knowing that information, then we can figure out, well, what's a pip actually worth? So let's assume that our exchange rate has changed. So now it's 109.485. So it used to be 475, now it's 485. We still are controlling basically an interest in 100,000 units of the base currency, which is the dollar. So we can work this out and say, well, I've got $100,000 worth of value times my exchange rate, which has changed to 109.485. If I multiply that out, now I have an interest in $10,948,500 worth of value in the yen. Well, that's 1,000 yen change, which, does that answer my question yet? Not really. I need to convert that into knowing what that actually means to me as an investor. And if your account is denominated in dollar terms, then I have to take that 1,000 yen change, and I'm going to convert it at the exchange rate, which I know is 109.485. So if I do that, then I'm going to be able to figure this out as to what's the change in value in the overall trade, in this case, or change in value of just a single pip. So here, if I take that 1,000 yen, and I'm going to divide it by the exchange rate, which is 109.485, that's going to give me a pip value, or a minimum value change for 1 pip of $9.13. So we'll do a little bit of rounding. That's how a pip value calculation would work. Now, you don't have to do this by hand every time. In fact, you may never have to do it again in your life. But it's really important to understand, how does it work so that you could repeat it if you had to, especially if there was some ambiguity or you were trading a currency or an opportunity in a currency pair that's a lot more exotic and less straightforward than some of the majors.